view of perspective, it is still on a downtrend. And while it's still on a downtrend, you can see here the highs are still going to be lower compared to the previous lows, despite here that's that low and now breaking now on that low. Yes, from here to here we have a higher high, but here to here we still have a lower high, right? Okay, the exception is that for continuation to the uptrend is if this high will be broken, then yes, but in this particular piece, this trend has definitely been broken. Okay, but here, in this bigger picture, it is still not an uptrend or a downtrend, or in that case, because also on the bigger trend. Now I'm trying to get more confused. And let me change the color to light green. Right. So from here to here, the highs are higher. That high is higher compared to that. However, this low is lower compared to this low. But this low is higher compared to all these lows here too. So overall, within this whole perspective, it is an uptrend. Around here is the sideways movement. Around here is the downtrend. So the question is, if we're going to trade this, how far can we go? If you're looking at this perspective, then the major target point is about the 105, 106. But if you're only looking within this perspective, then 1 or 2 days you could trade. If the high doesn't want to surpass this high, then you go short, right? Okay, so let's go through. And notice well from the price is going away from the 8 or the 10. Then all of a sudden creating a new high. We change that. There's now the new high right there. And within the band, it has to touch the 8 or the 10 before it chooses to rebound. Okay. And we can see the lows are higher compared to the previous lows. Then if this will continue to break in order to continue to the uptrend within this level, let me now create a new box, change the color to purple. Yeah. If we're projecting the price to head towards in the future, then it has to create a new higher high before a higher low. Okay. Oh, 418.10. So we have a new high. And at the same time, the bands are just trying to come back all the way down within the 8 or the 10. We have another high. If this high has broken that high, then definitely this point of view within this trend is now absolutely broken. We have a new uptrend in order to beat to head towards this level of supply. Okay. Then it will take time in order to go through. Has to beat that and all the way to 106. Okay, so if the price goes away within the band, it has to come back down to the band. Then it will come back up again, then come back down to the band, come back up, come back down to the band. If it goes below the 8 or the 10 way too fast, it has to come back up to the band before it continues to go down, try and touch it, and then try to reverse. Alright, so 8 and 10s, or the moving averages in particular, regardless of whatever moving averages we use, either 10, 20, 50, 100, 200. That's pretty much the whole purpose of the bands, is that if they break out on the equilibrium, it has to continue to touch the next supply, come back to the equilibrium, goes back to the next supply, come back to the equilibrium, goes back to the other supply. And if I go and change this now to the weekly, things will change, right? So see here, supply, demand, equilibrium, supply, equilibrium, demand, if it's going to a channeling formation. If it is going to a downward point of view, demand, equilibrium, demand, equilibrium, change of the equilibrium of price, go back to level supply, supply, equilibrium, demand. So that's what it normally tends to do. So it's very clear here too, back in 2011, demand, supply, equilibrium, supply, equilibrium, demand. Questions?
Yeah, I have a question. So on this chart, at currently where we are right now, it's I'm kind of just not able to picture kind of what it's doing right now. Like, it looks like it's just kind of I mean, basically the trend is going sideways over the past couple months, and I guess I kind of want to know, like, when do you decide that the current trend is broken on this weekly, at least in this particular formation?
Well, firstly, we need to define what the weekly trend is. It is not going up or going down, it's on a sideways movement. And it's in the equilibrium. At the end of the week, if the price is above the 8 or 10, that will show a long signal. And where can it go? 105.58, 106. How much can you make? Approximately 150 on average, if it chooses to go around that area. And then later on it has to create a choice whether demand will try to push the price to break, to go all the way back to 107, even all the way to 110. But if it doesn't want to, if buyers think it's too expensive or doesn't want to go, then no one's going to buy and supply will take over, and it's going to come back down to the level of equilibrium once again before it will drop to the level of demand. So from here you can see it's just on the 50%. They are holding off. They don't know where to go, either to go up or down, right? But if the price is going to close above the 8 or 10, the probability that it can go to the level of supply is highly probable, because why? It is going within this level. It is in a sideways movement. So from here, half, full, half, full, down. Then it can go here before it can come back down again. Or if it doesn't want to, then all of a sudden, boom, it can break, because first, second, on the third trial run, if it breaks through here and will create a new higher high, odds and probability can continue this and go boom, it can continue to go up, right? But if it doesn't want to, then they will decide again to go through around the 50%, and then the price will come back down to parity or 101. Okay, so they will create a choice, and who's they? The market being dictated. Or our job is to follow where they go. All right, so it all depends once again in terms of your intention. If you're willing to wait to go around here, then it will take another month, a few more weeks, right? About a month and a half. December, Christmas rally. If they choose to do that, then fantastic. But if it doesn't want to, then it will just consolidate. You can go back to the daily chart. See how the daily chart is showing slowly pointing to the upside. Not a lot of volatility, not like here. So they're just waiting for something. Notice how the US market is tanking to the downside and this one's just cruising. It is not dropping, it is just doing what it wants to do. And why? Because of gold as well, right? Gold is just going up. And it's just trying to neutralize between the dollar and the gold. Because if the dollar is really that strong or gold is really weak and the market is really weak, the price of the Aussie should technically speaking be speaking about here. But it doesn't want to. They're holding the price. That equilibrium price is they're just holding it off. Okay. So in terms of direction, shorter time frame, you're already seeing is an uptrend. Obviously, bigger time frame, you're just seeing sideways. It sounds like it's not doing anything, but they already gave you a clue. See this long shadow? They tested the price at 104.77. They will retest the price, and then buyers can either push the price to head back to 105.50, or if it's just hovering around here, that will collapse back down once again to test this longer shadow back to 102.41. So long shadow to the downside, long shadow to the upside, 50-50. So they don't know where to go, either there or there. But who is more in control overall? 50-50 since June. But on the bigger perspective, we are in an uptrend pretty much overall. We go through on the monthly chart, see how, okay, but they will take time to go beyond 110. Okay, and if they don't want to drop, this will come back all the way down here once again. But we'll see. But definitely it's an uptrend, whether we like it or not. Questions, challenges, issues? Did I answer your question as well, Anthony, then?
Yes, it was very good. Thank you.
Okay, cool. Alright, so Jason, let's go back now then to your query based on the euro pound.
Okay.
Okay, so what is the challenge that you're currently having?
I think it was more the Kiwi dollar. The euro pound, from what I see on this chart, it just came off of demand and it's on its swing back to the upside. And I'm looking at method one with this.
Okay.
And what I'm trying to figure out is, so those candles on the daily chart look pretty strong. The last two, currently the bulls are in control, but wait a minute. Right, so you have a range there, and that range where those bullish candles are, where the entry was. Hang on a second. So I have a fib set up on the high and the low, and I'm just trying to anticipate like where price action could potentially go with there. This candle looks pretty strong, that bullish candle there in the middle of those two, the most current candles. So I can see it hitting the 38% without too much problem. What do you think?
Okay, let's do a couple of coaching here. Righty. I will go through where it's nice and clean, okay, for now.
Okay.
A couple of things. Okay. Alright, this is pretty much for the whole group. If we're trying to say to ourselves, I'm trying to figure out, so let's start from you, Joe. What does it mean to you if you say to yourself, I'm trying to figure out?
You're trying to outsmart the market. You can't outsmart the market.
Okay. Alrighty. Anthony, if you say to yourself, I'm trying to figure out, what does it mean to you?
If I say I'm trying to figure out, it usually means I'm trying to get an understanding of how I feel.
Okay. Anne?
To me, it sounds uncertainty.
Okay. Jason, what does it mean to you when you say, I'm trying to figure out?
It's like, yeah, I guess it's like guessing.
Okay. In terms of, is it objective or is it subjective?
Figuring out, it's subjective.
And which is the beauty, right? It is like, if you are, yeah, the only thing I could basically analogize is through sparring or fighting. If you're trying to figure out your opponent, what will happen to you?
Yeah, it's not good. It's not good if you're trying to figure out your opponent.
In the ring or, say, in battle, what is our job?
To understand.
Say, if we are, say for example, you're in the ring, either you're trying to box the other person. Let's take boxing for now, right? If you're trying to figure out your opponent, what will happen?
It's too late then.
So what is our job meant to be?
To understand before you get in.
So
Get into the battle.
understand first before going to battle. Okay, which is pretty fair enough. We are trying to understand the market or where it's going to go, right? Understand first before going to battle. If you're trying to figure out, if you are about to execute and you're still trying to figure out, then either you're second guessing, you're being subjective, you're uncertain, you're trying to outsmart the market, or you're still trying to understand how you feel about the market. So in other words, within this point of view, you are not ready, right? Not ready to go to battle. But if you understand first before going to battle, meaning now if you are going to battle and you see this and you already executed, then your job is to react. Okay, no thinking. What else? No thinking
Take
involved. You just basically take action, part of your reaction. Take action. What else?
It's automatic.
Execute the plan.
Automatic. Execute the plan. Okay, now see how there's a big difference between the two, between the belief system of I'm still trying to figure it out, to understanding the market first before getting into trade. You're well prepared, you're pretty much objective, and you're just ready to rock, right? Okay, great. Let's go through. I'm anticipating on where it's going to go. Alrighty. Aside from you, Joe, what does it mean when if you say to yourself, I'm anticipating?
That can go either way for me. When I anticipate, it's to me, it's predictive.
Predictive, okay. Great. Let's how about you, Anne?
To me, it means that you've got a crystal ball there somewhere.
Okay.
That you already know what's going to happen.
All right, Anthony.
I guess I would be pretty confident about, yeah, I would feel pretty confident about it, I guess the direction that it would go. Anticipating. Or I would have a plan, I guess.
Okay, and Jason.
Yeah, it's a certainty.
Sense of certainty. Okay. So how can we say to ourselves, I'm anticipating, and then at the same time you're trying to figure out at the same time? See how there's a conflict between two, right? Trying to anticipate, I'm anticipating that it's going to go up, but I'm still trying to figure out. So would that work, or what would happen then? If there's a conflict between you trying to figure out but you anticipating where the market is, what happens then to the end result?
Nothing happens.
Okay, Jason says nothing happens. How about you, Joe?
Can you repeat that question one more time?
If we're trying to say to ourselves, I'm trying to figure out the direction of the trade, or I'm still trying to figure out the pair or the stock or the futures index or whatever we want to trade, and at the same time trying to say to ourselves, I'm anticipating to go this or to go there. So there's a conflict between the two, right? So what will happen then to the end result if there's a conflict between something negative and something positive?
Indecision.
Bingo, indecision. Okay, so at the end of the day, there's going to be an indecision. So if there's indecision, what happens to that?
You miss opportunity.
What leads to indecision?
Leads to
Lack of knowledge.
confusion.
Okay, confusion. What else?
Lack of knowledge.
Therefore, you won't take action.
Okay, knowledge. No action. What else?
No
What's
confidence.
No confidence.
Stress.
Stress. Okay, here we go. Hesitation. When there's hesitation, there's going to be one big word. Fear of execution. Okay. So everything is correct. In other words, a lot of negative emotion, right? Indecision, lack of knowledge is because of the indecisiveness. Confusion is the lack of knowledge. Hesitation is because of lack of confidence. Hence no confidence, no action, and then all of a sudden there's fear. You said, oh my God, I'm clouded. I don't know what to do. Hence, you can't execute. There's no execution of the plan, second guessing, trying to figure things out still, right? So hence there's the pull back and forth between the good and the bad. Okay. Alrighty, So how can we fix this issue, this problem?
By trading.
Training, planning, so understanding first before going to battle. Here is the solution, right? So how can we understand first the marketplace before going to battle? It's creating the plan, but before the plan happens, also need to understand how they operate as well, right? How the market works. Okay, then how can we then understand the marketplace? What can we do to understand the market? Because you guys got the knowledge.
I'm
There must be
coaching.
a setup.
Okay, so there's a setup already, right? There's a setup right there. You have an empty setup. Okay, if you're just if you're method 2, method 3, you're just learning method 2, method 3, definitely there is a setup right there. So if I go to a method 2 setup, bingo, that's there. And what does the plan say? Okay, as long as it surpasses the price or the trigger, you have a setup, you have a trigger, you have your stop loss, you have your target points. Is there anything else to think about?
None.
So what causes us to overthink things?
Overanalyzation.
Why do we overanalyze things? Especially in trading.
Lack of
Because you're not
confidence and fear.
Ooh, lack of confidence and fear. Okay, what
Because you're not
causes
confident.
that?
You're not confident of the method.
Even if someone is confident with the method, but you're not confident on what the future brings, you'll be screwed. The reason is because of the big uncertainty of the future, or what the future brings. This big whole empty space. What ties down to the uncertainty of the future? That why do we keep need to overanalyze something even though there's nothing really to analyze? What's the inner core, or what's the actual cause of the uncertainty that we need to seek certainty?
No, you don't really need to, though.
So if we look at this as a big onion, what is the root cause of that onion? Because if you really don't need to, then there's no need to overanalyzing. You just have to turn off your computer and just do whatever you want it to do, right? But there is a big link from the point of execution with the uncertainty of the future. What causes
Are you
that
looking
fear?
Fear. Okay.
So what causes that fear?
Emotional trading. I'm not sure exactly what you're looking for here.
Okay, and this is what I want you guys to think. So what causes the fear?
Lack of belief in yourself.
Even if you have a good belief in yourself, but if there is still the uncertainty of the future, it will still trigger the fear.
Because you're trying to think of the future and not the now.
Well, let's think about what's on the line here. When you're trading, what's pretty much on the line when you're trading?
Your money.
Bingo.
Money.
The money factor. So in other words, it is the what?
Fear of losing money.
Loss. Attachment.
Because if you're not attached to money, then you don't care about the uncertainty of the future, right? If you have the certainty and you have money on the line and you know that 100% you're going to win, you're not going to have any fear, correct?
Yes, I agree.
Right.
True.
Mm-hmm.
If two people answered about you, Joe, or Anthony.
Yeah, I agree.
Yeah. Because everybody has a belief system when it comes to money. You know, especially if there's a lack of, or there's an experience that you've lost, right? You lost a lot of money, and you're not willing to lose anymore. So if you're not willing to lose any money, then the fear will always come in place because you're afraid that you might lose it. Hence the attachment. You know, and now the focus is losing money. You're no longer focus of the understanding or the whole process, taking action, being automatic, executing the plan, right? Here. Now the focus is about the uncertainty with attachment to money, because if you're attached to money, all of a sudden the what ifs will come into place. What if it will go down? Then hence, if it goes down, then I lose money. Then I need to keep on looking at it. What is really the market really saying? What is really doing? Does it really go up? Does it really go down? And in order for a person to ask, what do you guys really think? Do you think it's going to go to 38, 50, or the 62%? So when that automatically happens, it also means to me that that person is not willing to lose that money. Because if you already have a stop loss and it's a calculated stop, would you really care about the fear?
No.
No, because you're already taking full responsibility of that stop. Regardless of whatever happens, if the price already got down over here and you're willing to lose, say, $200, $300, $500, $1,000, $2,000, then so be it, right? Then hence this is where you can move forward, because that's what gives you the certainty. There is always not going to be uncertainty, right? Regardless whether it'll be a career-wise, sports-wise, even life-wise. We can get hit by a lightning, somewhere get hit by a road. There's no certainty about the future. What are jobs that has a lot of certainty?
Union jobs.
Say in the corporate world, what type of profession that has a lot of certainty? That can give you the same result. You know the result.
For jobs,
Mm-hmm.
I don't think there's any jobs that have complete certainty, because anything can happen at any time.
There is, though. You will know the end result. Programming jobs. Right? If you program something, you will know the end result. And if it doesn't work, it's easy to track on which one's not going to work, and you can change it automatically. You will know the result, whether if it's a 1 or a 0, or it's a yes or a no, right? Accounting, you will know the end result if you have all the information. Well, I don't know about teaching. Being a lawyer, well, there is always going to be a result. Being a doctor, well, surgery, there is no guarantees that the person will survive as well. There's no certainty, so what other jobs out there? Yeah. So Jason, if you go to Iraq or with any of your missions, is there a certainty that the guarantee that you can come back?
No, there's no guarantee.
Yeah, there's no guarantee, right? Is there any guarantees that we can get all the clients that we're gonna go to and Like say with all the clients, prospective clients that you do have, are there any guarantees that you'll get them all?
No,
No?
no guarantees. No.
All right, Anthony, in your job, in the IT industry, is there always going to be guarantees that you'll get the same result all the time?
No, never.
Right? And Joe, working for, not Adobe, shoot, is it Adobe? No, not Adobe.
No, Oracle.
Oracle. Is there always going to be certainty in your line of work?
No, we're actually waiting to get paid for a couple months now. So yeah, but don't mention that. Yeah.
So there's no certainty. Then if there's no certainty in any type of job, then what gives us the certainty in our line of work?
How much you know?
Comes down to this. You get paid the same salary each month, and you know you're going to get paid regardless of whatever job that you're going to do. Correct? But when you're trading, you don't know, you don't have, if the part of the uncertainty, you don't know, there are no guarantees that you're going to get paid.
Right.
Right? If you have your own business, if you don't do a proper sell, or if you have a retail business, if you don't sell, then you don't get paid, then you don't get a salary. Right? And that's why owners of a company has a bigger outlay in terms of the uncertainty of events compared to someone who's employed. Right? So, that's the issue. This is like a retail business. If you don't analyze, you don't do a good job, you're not going to get paid, right? Because of the attachment to money. But if you're trading for somebody, and then say for example, I hire you to trade for me, and I'm going to pay you a base salary, I'll guarantee you won't care because it's not your money. You're still going to get the same amount of money each and every month, and you're going to, as long as you're doing the job for me, you're going to get paid. But if you switch roles and that this is your business, then make sure that you're going to perform to your best ability, because if you don't perform, you don't get paid. If you don't get paid, you're not going to eat. You can't support any of your family, you can't support any of your major necessities in your day-to-day life. Hence, that's why it's a challenge to be a professional trader, because you're under pressure. The question is, how can you perform without having the pressure? The answer is taking this out, being detached to money. And then you need to focus on the solution for that. Okay, is the process. Performance. Performance is the key to perform. Does that make sense?
Yeah.
Yes.
Makes sense.
Cool. That was a good session today. Did you guys find it interesting, today's session?
Yes, sir.
So in other words,
Good.
you need to understand first who you're dealing with before you try to figure it out when you're already executed. You cannot execute and then you're going to try to figure it out. You're trying to figure out your opponent and then trying to anticipate at the same time. And to summarize that, because if you're going to do that, there's going to be this immersion, indecision, confusion based on lack of knowledge, second guessing, and so forth. And the root cause of that is because of the uncertainty, which causes fear and leads to attachment to money. Why? Because you want to make money, but there are no guarantees that you're going to make money, right? But if you accept that there's a possibility that you're going to lose and you take responsibility of that loss, then you can take a risk. If you can take a risk, don't trade, plain and simple. Alrighty, then we'll wrap it up. We'll see you in the next class.
Cool.
Thank you.
Thanks, Ray.
Good night, Ronald.
No worries. See you, Joe. Have a good night. Bye.
Yep.